Hello, 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 everybody. It's another Tuesday night. Let's do some stock analysis. Let's see what SPY did today. I haven't even had a time to look at what SPY did today, so let's take a look. Looks like today SPY was red on the day, so a down day for SPY. Looks like it finished at 395.91. Let's look at the hourly. So it started the day high, but it just kept going downhill. Some standstill. Curious to see what happens when it breaks this 50 moving average on the hourly. See if it goes down more or what happens. What I see on the weekly is this double top. So it's something that I have to keep an eye on. I think it's been struggling since it's been struggling on this with this resistance. It could go back down. Will, you asked what's my prediction for the week? I don't know. I'm not sure. This week is actually a really weird week. We had a really slow week. There hasn't been much of any movement. Like, yeah, we made all time highs, but we didn't make all time highs with that great of a price action. We just saw it slowly sneak up above all time highs, and so I'm kind of still a little worried about what's gonna happen. Um, See, the monthly was still super high up. You would think that uh the stimulus would have moved it, but I think this was the move. This move right here was the stimulus move, and now that it's for sure a thing, there's nothing else to really prompt it up. I think it's gonna fall from there. Um, yeah, but the last hour of the day, like the last couple minutes of the day, I did take a look at Tesla and I saw that it was going down today. So the screen, and I believe it wasn't just Tesla. I think it was all big techs. Like Apple did the same thing. Apple had a red day. Uh, Amazon, Amazon had a red day. Um, I am looking at Amazon, Apple, and Microsoft is because they comprise a huge portion of SPY. So Microsoft actually went up today, but then don't be deceived by this candle. It went up, it went up, but it also was met with a lot of resistance. Yeah. So the reason why I look at those big three is if we look at the what uh what is inside of what is inside of SPY, we Apple is 5%, almost 6% of SPY. Microsoft is 5.34%. Amazon is a huge portion of SPY too. Amazon is almost 4%. So that's crazy. So you have to really take that weight into consideration. And you see the IT sector is 26% of SPY. So you can see all the big tech companies here. So they really weigh down SPY. And that's why I look at them. I don't if you really want to know what SPY is gonna really do, what's gonna weigh SPY down, just look at the text and what they're doing. So for sure, it's probably it looks like a part of rotation. Let's look at the heat map for today. Let's see, market watch, visualization. Let's look at the index. Yeah, so right here we have a lot of red sectors that were green. IT was sort of green, communications sort of green, but everything else was red. Energy was red, real estate, industrials, uh, healthcare, financials. Yeah, so and that's I'm curious to see what happens tomorrow. Given I keep seeing this right here. The last few days on SPY has just been really slow up, and um, as we're breaking these highs, I don't know for sure. I want to see something like this again. Where it's a huge move up, but let's see. Let's see what happens the next few weeks. The structure still looks good. What concerns me is just that this monthly is way too high. I don't know if people are gonna get in or what. Um, I was hoping for a bigger pullback so I can get in cheaper, but we can't really. We can only take what we get. We can't really dictate a huge position in Tesla. So this, I actually wanted to go down more so I can get in. I was hoping that it breaks this 200-day, but at the moment it's in this. Pretty much every stock has the same pattern where they're in between the 50 and the 200, this danger zone where we don't really know what price is going to do. You can see Tesla has been struggling with the 700 level. Couldn't really break it. Every time it goes up to it, it just gets rejected off, or it tries to go a little bit above 700, it just gets rejected off. And so we don't know. I don't know for sure yet if this is a bear flag in the form or if this is a bull flag. So we'll just have to wait and see. I'm curious to see how March ends. This monthly candle in March. You know, Same thing with Apple. It's in that danger zone too. A lot of stock is in this danger zone between the 50 and the 200. They're not really pushing any new highs, but they're also not really falling. So, this is where if you're a new trader, you probably might get frustrated saying, "Oh, what the hell is going on? I can't wait this out where, we're not moving. We're not seeing movement like we used to see anymore." Well, gotta take into consideration that 70% of the time, um, stocks are in 70 to 80% of the time, stocks are in this consolidation period where, they're not really running. They're just sideways for a long time. And if you get antsy and you want to trade or you want to keep doing something that will break, uh, doing something just for the sake of doing it, you might take a lot of losses in a time like this. So now is the time to just accumulate some cash on the side. If it goes down lower, you take advantage of it. If it breaks out, you can still join in the breakout play and it's gonna keep going higher. But if it goes lower, it's always to your advantage. So this week I actually found a really cheap stock that I got started on the position. So it's POW, and it's an ammunition stock. And as I was talking with the other guys earlier this week, what I found interesting was that every year that it's been a Democratic presidency, ammunition stock likes to go up. Ammunition or gun related stocks likes to go up. And oh well, look at this. This cheap stock. It was only $5 when I got in, and I sold puts on it. So I sold the 750 puts. But my commission got me. My commission would, if I ever get assigned the shares, would probably give me about the around 550. Because I sold a 750 for 190, around 190. So 750, that's the cost average for my shares, right? Minus the premium. So 190. So around 160. Oh, around 5 560 is my cost average. It's around down here. Yeah. Which is good. I like this play. I like plays where not so much the daily, but I like the plays where they like to keep their weekly forms. And yeah, hopefully it bounce up. All I can do is just bounce up, but I'll keep on selling contracts against it and just see how it goes. Democratic presidency, so I have that little win. take advantage of that. Hopefully, some new gun law, something caused the uh, ammunition and uh, gun related stocks to go up, and that's just something that I've noticed. Yeah. So, if you guys have any stocks that you want me to look at too, feel free to drop it in the comment. If not, I'm just gonna go over uh, what has happened so far with the stocks that I'm looking at, and um, yeah, that's pretty much it. So I mentioned this stock the other day, and it's been going up. It's still in that danger zone, but what I played it based off is uh, somebody asked me to re-explain. Let me see. Oh, so a put. Okay, all right. I think that was Powell who asked of that. So I sold a put. So basically, when you sell a put, you're giving somebody, instead of buying it, you're selling it. So you're getting like so the one I sold was, you can see I have an order out for this one, 750. So when you sell put, you get your premium upfront. So that's the price. That's the premium is the price of that contract. Instead of paying for it, you get that premium. So I got 190. My position. Let's see. Yep, 190. This one. So that means that I get $190 upfront, and so but in return, I give somebody the rights to sell me 100 shares of POWW for 750 a piece of by expiration. So if the price doesn't go up, if the price goes above 750, I won't get those shares. But if it stays below 750, then yes, I get the shares, and I always get the premium because you get that premium upfront. So why that is advantage for you is because as a contract gets closer to its expiration date, this contract has 31 days until its expiration date. As it gets closer to its expiration date, data eats away at it. So if you're a contract buyer, you lose that money and data every single day. So for this one, let's see, let's get that data up. So data for this one, data is not much too. Data is like $1. So it's not much, but it's something. Uh Data is about $1.26. So every single day closer to its expiration date, which is April 16th, every single day that it gets closer to April 16th, data grows. And as data keeps growing, you keep as a seller, you keep that money. As a buyer, you lose that money. It's what you pay to stay in that trade. But as a seller, that's what you get to keep as you stay in the trade. So, in my experience, I like to be a seller because instead of data killing me, data is on my side. And the way I can win on this trade is if this stock just stays here in this level and does nothing every single day. I'm eating data, so the price of my contract will always be lower. So even if I buy it and I buy back the stock, not the stock, but the contract to cover, right, to get out of my position because I shorted that contract. If I buy back closer to the expiration date, you know, I will still be winning if the price does nothing. Right, the price just stays at this $6 level. I still win. If the price goes above 750, I still win. The only time I lose, and it's not so much of a loss, is because my cost average is at 660. If it goes way below 660, like I wake up one morning and it's at $4. But this is also why you want to pick when you're doing this strategy, selling puts, you only want to do it on stock that you feel comfortable holding for a long time. And my the reasoning behind that is because for me doing it on this stock is because it's a Democratic presidency, and I've noticed in the past that Democratic presidencies, munition stocks or any gun related stock would like tend have the tendency to go up. And I believe Wall Street Bet is also playing this stock too. I think somebody in the chat uh, from earlier this week, I believe it was Paul, alerted me to that Wall Street Bet has their eyes on this one. So it's not this is not advice for you guys to go and buy this stock. It's just that I have a position in this one. So disclaimer, huge disclaimer. Okay, so this is just a cheap one that I found that I believe in long term too. So I wanted to get a position. So it's 100 shares here and there, and I don't have shares yet, but I sold the put, so potentially uh I have an opportunity to maybe get the shares in the future. And for me, I think it's yeah, yeah. So all right, let's look on. I believe a lot of people are probably looking at this stock too. NNDM, Nano Dimensions. Nano Dimensions. I don't like the form of this chart, but hey, it's so close to its lows. Anything can happen, right? And if it keeps this, because this monthly chart's gonna just be trash, just noise to you. There hasn't been any development, and so if you're playing it, play it based off like the weekly or the daily. The good thing is it held above its 200. So if you guys are just traders off the 200 moving average, it's a good place to get in. You're you're getting in low enough to where you can kind of let it go, and it might not be a stock that you want to put something like 20 grand to 30 grand into, but a few $100 wouldn't hurt. If you just do it based on your risk. Right? If you want to risk like 2% of your account, maybe just put 2% of your account into this position. And if it completely goes to zero, oh, well, it's just 2% of your account. It's not much. But if it goes up huge, you could have a potential return, maybe 5%, 10% return, which is good. Don't aim for home runs. You know, who knows where this thing could go? If this is a really uh, risky play, but if it can also play out a lot too. If you're gambling, this is like a 10-to-1 gamble. Stock that I've been following for a while too, and I'm thinking about getting more shares in is Zynga. Now Zynga, they're like that little, that web game company with like I believe with they used to have games on Facebook. I don't know if they do anymore, but they've been going up. They've been keeping the steady trend, and that's what I like to see. I like to see them have this steady stream trend of just going up consistently. Now, I don't know if this is too high for some, but this is another stock that I would consider selling a put on. So, something even from now or even when if it falls down to $9 again. Sell a put on. Just keep a position of maybe 100, 200 shares. This is it's only like a grand or 2 grand. You know, you get if you're risk aversive, maybe sell at $10. You get $33. Not bad, but 30% return. Not bad. Not bad. Not the greatest, but not bad. Or you can be a little bit more aggressive and sell in the money. So you sell like the 11. Stocks like this, I would just sell puts to get in. I wouldn't buy out. I wouldn't buy the shares and then ride that. Sell puts, and that way, if I don't get a sign, I keep collecting every single month until I get a sign, and then I just stay in that position and do the opposite. So calls. Smile Direct was alerted to me this year, but doesn't look like there's too much going on with it. Um, yeah, I like the concept of Smile Direct. Smile Direct is like it's like they're like that at home dental stuff. I think they do braces and stuff where they send you a kit, you put it in your mouth, and then You send it back to them, and they send you some Invisalign dentures, and you just do that. Yeah. Another stock that was alerted to me is this Daoyu. This is a Chinese streaming game streaming, so kind of like Twitch. Uh, I like the formation of this chart. It's pretty new, so but I like the formation of this chart, and it seems to be keeping it. So I hope I want to see how this one plays out. If possible, probably get a few shares, or another stock where I would sell some contracts against it. So if it's 15, sell the 15, you get $200 for the 15, um, and just keep selling. So go 30 days out, sell the 15. So you see, 2 divided by 15, that's 13% return on the money. So you fit for 1,500, you're getting 13% return, which is pretty decent, for 30 days. And if you don't get a sign, you go ahead and you just keep doing that. You go another 30 days out, which this only has monthly. So then you go another 30 days out, you probably get another $200 for the 15. Or if it goes a little higher, you get the 17. And you just keep doing that until you get a sign. So you can go like a whole calendar year out. So if you get 13 here, 13 here, 13 here, it's right here, it's already 26. 26, and that's 39. So you can see how it adds up. It's not much, but it adds over time. And that's for people who want to be patient to get the shares. And when you're patient and you have time to wait for these shares, it pays off. One stock that I'm actually in this week is Microvision, MVIS. Now this one was very volatile this year and part of last year. So I actually got in around last Friday, when it was right before it came 15. So it came and did this pop. I rolled this pop up. Um, for this one, I actually got like 500 shares of it, and I can show you guys 500 shares of Microvision. I also saw the cover call against it. And why I did that instead of doing a short puts is because this is a really explosive stock. You can see, from like $7, they exploded all the way up to 24, and I don't want to be left behind. So what I did was I bought 500 shares, and then I went 30 days out, and I sold the 25. So at the time, the April 16th, 25 25 puts calls, actually. The 25 calls, I got them for around 176 a piece. So I got 5 of that. Let's pull up my handy dandy calculator. So for that, I got 5. So I got $880 for a premium that I collected for that. And on top of that, if I were to sell, if it gets called away, right, in the unlikely chance that it gets called away, I still sell 500 shares for 25 a piece, and then you add the premium to it, which, that's a pretty decent gain. And from there, you minus your cost average, of course. So let's do this. 500 times, I was like, say 15. So you see, 13, 8 minus, it cost me 7,000. So I get a gain of like 5,800, divide that by my cost average, 78% return for 30 days. That's not bad. So you just keep doing that over and over. Like if I don't get called away and by April 16th and I sold at 25, I'll just see whatever price it is at uh, uh, when when after this expiration date. I'll get the May 21st, and maybe I aim for like the 35 or something. Maybe price was in the 20s, or it's just like at 24 or something. and but it didn't get me in the money. So I still have my shares, and my shares didn't get called away. Maybe I could do 30s, and I just keep doing that. So another another easy $800 or $900 a month, right? And I just keep doing that every 30 days. And you're just waiting, waiting and waiting. So you're writing the gains and you're writing the premium. So that's two ways you're eating. So you're eating good. You're just basically just waiting and making your money work for you. So that's why I did that. Highly explosive stock. What I think is going to happen with microvision, it's going to do this kind of this zigzag. It's going to do this, and until it's going to build this little um pendant, or this little bow flag that goes on forever. So April 16th is right here. This far out. So I don't think it's able to get to 25. But if it does, it's still to my advantage. Yeah, well, might be a buyout. I don't know. Let's see. I mean, in my for my situation right now, it'll be a win-win no matter what. So always position yourself to be in a win-win situation. Where I would lose on this is if it keeps going down, but I already told myself, this is something I want to hold for a while. So I have like an outlook of like 5, 10 years on it. And it's not too much money too. So just throw a little bit of money at it. Let's look at what airlines doing. Airlines been crazy too. This is American Airline, AAL. Uh, see some resistance here. Curious to see if it can make a recovery this year. Yeah, well, if Microvision can get to 100 by the end of the year, it'd be great, man. Mhm. Easy money for me. I might get to go on vacation this year if it goes to 100. Let's see. Let's see. It's only March, and we're seeing some turbulence, which I plan it for the turbulence. I don't plan for anything to run until like the later half of the year, or not even the later half, the last quarter of the year is when I think everything's gonna be going. So, yeah, AL. I hope it makes a recovery, because if it can make a recovery, it probably go back and break 60. A lot of stocks have just been shooting upwards. If not, we could see it like go to 30, fight with 30, and then fall. But let's see. This rocket did a rocket and then it came back. This is one of the Elon rockets, the self-landing one. Let's hope that it lands, then it can launch again. But that was a big dividend though. That's $1.11. What are my thoughts? Hey Nikki, thanks for joining. My thoughts on ExxonMobil. ExxonMobil, I don't really play oil, to be honest. Like I got burned. I got burned before, but I know my friend Powell plays oil. I think it's they pay dividend. They pay a dividend. Not much, 1.44. But they've been beat up. Oil's been a sector that's been really beat up. Lately they've been running again. So you want to see, and as of right now, I think it's pretty high. Um, I might in the future, I think it might retrace it near back to like the 50s, or if it's a huge retracement, see if it can hold above 48. Yeah. So, um, but oil's not gonna go anywhere for a long time. So ExxonMobil, if you play oil, it's a good thing that you're playing Exxon, because Exxon is one of the top oil companies. It's not gonna go anywhere. The other ones are gonna die before Exxon. And if it's a dividend play for you, or a play that you just want to park some money in, hopefully uh, they're oil company, but they continue to oil company, but I hope they continue to do other explorations of energy and stuff and whatnot. So hopefully they keep kicking. Yeah, yeah. My friend Powell picked it up at 36, so 36 is all the way down here. That was like at its lowest. Um, yeah, it's been a pretty stable stock. I think it's just this year that COVID and then a lot of that green news. But oil's not going to go anywhere for a long time. And ExxonMobil is probably one of the better stock in the oil sector. So it's a good pickup if you already have shares. Yeah. So it's yeah, you don't want to, especially if you're playing the oil sector, you don't want to play, you know, really low ones. Let's see. Well, you asked, can we look at the charts again at a few stock on the daily? Look at the indecision candles, same pattern for most stock, like a W. Yeah, well, a lot of stocks has been doing that. A lot of the pretty much just the tech stocks. Apple did that. Indecision here. It's in that danger zone. This danger zone. I don't like it when a stock sits in here for too long. If I'm playing long term, I don't really care. But if I'm like swing trading, this is the worst area to be in because you don't know if it's gonna just bounce back and forth in this range for a long time. But if you're a long term investor or a long term trader, this is a good pickup area. Just pick it up. All right, thanks, pal. Thanks for joining me tonight. Yeah. Oh, do you have any stock that you want me to look at in particular? Yeah, pal. Uh, Iron Condor is good right now because you have a range right here, a range here that you could play. So Iron Condor, what it does is just you're selling calls up here, you're selling puts up here, call spreads and put spreads, and basically if it stays in here, you're good. X paying. Danger zone too. Danger zone is small though. I don't know what's gonna happen. When I see something like this and the danger zone is small, it kind of almost gonna be a reversal where it's gonna be like boop, goes down. But who knows? Maybe it can tomorrow pick up some steam because these patterns. The one flaw about seeing patterns like this on the charts is that these patterns are really news driven, right? So if like some news happen with Xpeng tomorrow, it won't even follow these patterns anymore. It'll just boop, shoot up. So just be careful. When you see patterns like this on the chart, it's okay to play with them as long as there's no a huge news that's going to be released. Okay? Just play it. Just play what you see, right? And pretty much what you see and what you hear. Because something like these EV stocks, they're if they get a little bit of good news, they just go and they're out. And I'm praying for you. If you have shares in here, I'll pray for you. Yeah. But it's good if you believe in it long term, it's pretty low. If it goes lower, I would add. For sure EV because they have like future, just maybe park some money in it and never look at that money for the next like 5, 10 years to see how it does. For sure, if it's like Tesla, let's go look at the Tesla. That's Tesla all the way back when it first started, right? Oop, too much. Yeah. See Tesla when it first started, you know, right here, this price has been put here because of the 5-to-1 split. So Tesla was never this low. Tesla was like always like around like the 15 level. But yeah, if you're a long term trader, man, just buy. Maybe it'll pop up. EV has like a 5-year plan. Everything wants to be. A lot of states wants to be zero emission. EV vehicles. So you have um, some room for basically some room for some from growth. And Zong said to play all the downtrends. And buy all the downtrends, he said. That's true. If you're a long term investor, if you're a long term investor, uh just buy all those down days. Well, don't buy every single down day, but a good tactic if you see it going down like this, like for example, Tesla, you see it going down like this, maybe every 2 weeks, add a little bit to your position, and just keep doing that until you're happy with your position size. Okay. So, all right, let's move on. Workhorse. Workhorse has been beat up too. These are the these are the EV companies that eventually, and you can see it's gonna come in waves too. These runs, it's gonna come in waves. You're gonna see, a big run up like this, period of time where you get see a big run up like this, and then people are gonna take profit, and then it's gonna stay still for a while, and then another big pop up, right? And you know, just be patient, right? If you're a long term focus mindset, you know, even if you're a day trader or a shorter term trader, still put a few shares away. A rainy day, rainy day shares. Let's just see how they perform. Uh, so yeah, this one, if I was to play it, I would pick it up right now. It's really low. I know Mike was in this one. Mike and Kevin. Fobo. Fobo is pretty new too. I like this pattern on the weekly. This is one of my favorite patterns to play in. It's just the weekly. Just to buy when it's low on the weekly, and just to let it ride out. Most of the time, these things bounce, and they never return to this weekly again. And you just keep seeing that money print. One of my favorite plays. You just have to be patient with this. Yeah, yeah. Well, buy the dips, sell the rip. Let's see. Kroger. Kroger, pretty stable stock. It's been range bound between here. I see it trying to make some headway here. Let's see. Yeah. I just stick to the weekly because, the weekly, you have a few months in there. Let's see. Workhorse will drop more without US postal contract. Investors are betting on the contracts. Yeah. Hmm. I think Zong talked about this one. So the US postal are going to be given to this one, Zong said, which, I like the pattern on it. Oshkosh, Wisconsin. Only two things that come from Wisconsin: killers and murderers. And cheese. So that's three things. I'm just kidding. Uh, yeah, I like the pattern on the monthly. So if these guys are they don't do EV, do they? These guys got the contract, you said? Oh wow. If they got the contract, the US Postal, And that's a big fleet that they have. Yeah. So as you play this, might be a little bit too high right now, but if you wait for retracement, be patient, wait for the retracement. Don't feel like you missed the boat. Oh, you did miss the boat by a little bit, but wait for it to retrace. It always will retrace back to a place where your risk to reward will be better. Not saying that it's going to come back to these levels, but it's going to come back to a level where the structure of the market is going to be a lot safer for you to get in. Then that's when you get in. Talking to EV, I think we should also look at Fisker. Now, these guys, I believe these guys have like a contract too. They have a contract with something. I don't know. I think it came out back a few weeks ago. But if you guys are looking for EV, it's between I would say this one. I would probably pick this guy, and Tesla to play. And it looks like it's coming back closer to where we want to get in around 18. Even now, start to scale in slowly. As you scale in slowly, just add a few shares and let it ride, let it do its thing. Fisker. I think a lot of people in the group also have some shares in Fisker, but they got in really really low, probably below 15 or something. A good one, something that I consider playing. This one, I'll add it to my golds list for the future. It's called golds because it's gonna become a gold mine for me. Kevin's Fair, BX and T. These guys, they do they're like mortgage and stuff, and so real estate. They've been going up. They had good dividends too. If you picked it up last year, I don't know why this is not showing their dividend, but their dividend is pretty good. $2.84. In reference to its share price, that's really good. If you can get it, if you can get it even lower, if this thing ever comes. Last year was a blessing. That was a blessing in disguise. It sucked that COVID hit, but it was a blessing in disguise for anybody in the market. It's a really slow stock, but it's going up. Space, space. Again with this weekly setup. Now, I don't like to see is where it's going down, then has one green week, and then it just does this. Yeah. Let's see. Yeah, Zong, you got in super early. If your yield is 17% for BXNT, man, just like the next 4 years, you'd be set. 4 or 5 years, 100% cover on your shares. Over. Hello. This one, I'm waiting for it to come back. It's way too high for right now. Healthcare. Man. A lot of the stuff that I put on watch list, they're for comebacks. This is Zong's favorite. We were just watching this one, Eyes. Watching it last week as it kept going up. Or is it Eyes or Eyes with the S? It might be Eyes with the S. Yeah, Eyes with the S. We're watching this one down at $5, and it just kept going up and up. This right here, this day. I'm still surprised it hasn't calmed down yet. I don't even know what they do. They were going up. Second sight. That's what they do. Let's look at AMD. Now these lines where we drew them on the Sunday section, the Sunday session, and we were looking at it. So you see, it's been range bound. AMD has been range bound. Let's see if it can approach this again. If it can approach this again, see if it breaks it. It's spent a long time in this range since August. It'd be a good time to buy around 75. You can get it around 75. Get it around 75. You can, and then maybe get out and look to get out at 95. Just keep playing this bounce back and forth for a while. Have to break above this will be the breakout play. So when it comes up above here, you maybe get a position with a little stop under here. Patterns you see. But what I like about this is like about AMD. Let's clear this drawing. Let's clear this drawing set. Expand this weekly. Why I like these weekly plays so much is look at that chart on the weekly. It's like clockwork. It comes back to the 50 and then it just never comes back again. Comes back to the 50, never touches it again. Sometimes you have those slow times like this, but hey, you trust it enough, give enough time, man. Something that I've noticed. If it comes back here and you try to play the same way, I mean, that's one, two, three, four. You even count this too. It's a lot. I've been following it since it was like a $9 stock all the way down here. 2017. Should have loaded up more. Yeah, it's probably one of my best running positions. But yeah, you can play this right now. It's really low. It looks like it wants to come back and test it again. So keep a lookout, guys. Uh, could be uh, could be opportunity here if you can get it down at 75 again and start buying 75. Let's see what it looks like on the monthly. The monthly 65. See, so 65. The monthly it touches this 20 average less, but if you can do it, like you see here, man, that's a play that you would have just got in 16, and then so the longer out you go, the more time you give it, the more money you can make. Patience game. Yeah, my alert alerted me to this stock. It's been doing this well this week, but it's in that danger zone again too. See that 50 average is posing as resistance. Let's see if it starts to head down tomorrow. I thought this is gonna be a play that it just goes up like this, but if it doesn't, and I get stopped out somewhere down here, oh well, I get stopped out. Just get in lower next time. Let's write it. I like the monthly chart for this play. Just maybe play off the monthly. Few years play. Slow play. My golds chart. My golds watch list. Look at this. T-Mobile. It's been holding it. It's been holding above the 50, which is good. Because then that means it's good for a swing trade. You set your stop down here, or maybe 123, 122, and let it go. So if you set it at 123, that's only it's only a $5 risk per share. It's not much. Chump change. $5 per share risk. Just keep watching. Yeah, and saying you can PM me for any about ETFs. Yeah, feel free. Monster Energy is holding here too. It's doing the same thing. It's doing that little W, but it's doing the same thing that T-Mobile is doing. So again here, set a stop around 87, 87 to let's say at 90 right here. $3 risk per share. Barely anything. People waste $3 on bigger things. put it in a stock like Monster. Instead of buying a can of Monster, put it in Monster stock. Ocon. This one's new, so not too many cycles to really go off of. If it comes back down, maybe around 60. All right, we're almost up an hour, but if you guys have any like stocks that you want me to look at, just feel free to drop it in the comments. Um, and we'll take a look at them. And if you want my opinion on it, feel free to just ask. I'm putting this time together so people can ask questions and I can show you how I do my analysis and so people can learn. All right, there you go, Kevin. Amazon. We looked at Amazon before, but I'll look at it again for you. Amazon is in that danger zone right here. But it's a good play though. Look at this. Off this if you play off the weekly and you're more of a, you know, something like Amazon, I would love to just buy if I had the money, just love to buy because every time it comes to this 50, man, this is just this right here is just a discount zone. You'll see it stays on discount for a number of months. If it does that, it comes back here. Who knows? If you get lucky and it comes back again, you know, get right now you're not too late. It's just that Amazon is just expensive stock, 3 grand for just one share. But 3 grand for that one share. What if it goes up to like 5,000, 6,000? Double your money. One share. You see this? Look how consistent that stock is. You know, that consistency in the charts. Yeah, there's some inconsistency periods, but this is just discount zone right here. And when it comes back, oh man, does it ever come back? You know, So if it's right now, if you guys are looking for discounts and don't know where you put your money, you can either give it to me or you can put it into a good stock. Yeah, um, yeah. If you can play Amazon, you're balling, Kevin. Kevin is rich. He can play Amazon. Johnson and Johnson. Look at that. Johnson and Johnson is holding above the 50 average. 50 average. That's good too. This nice stable stock. It's not gonna have huge growth, but it's these are plays where I consider them better than the bank, where you just basically park your money and just aim for a low. A low for a Johnson and Johnson will be in the 140s, 135. Yeah, Johnson and Johnson is where you park your money. Not a huge Not huge growth, but pretty very, very stable, very, very consistent. They even do a dividend, which is oh man, almost 6%. That's great for a whole year. That's better than any bank. You have the consistency to stock and you have dividend that's almost 6%. Oh man. You have kids, buy them some Johnson Johnson because you're already buying what is that? The baby shampoo from Johnson Johnson. And saying so, yeah, if you're new to the stock market and you don't have time to look at individual stocks, just buy like just buy something like SPY. SPY is basically a ETF that tracks the S&P 500. So in good times, bad times, just remember the just continue like buying it on an interval. Maybe if you get paid once a month, just maybe put a few hundred or however much you can afford into buying SPY. And if you don't have a lot of time to look at the market, what you want to do is what you want to do is just consistently buy it. It doesn't matter if it's at its highs right now or if it's gonna go down, whatever. Because you're just gonna buy it and you're just gonna buy it and eventually it's gonna come back, right? Because SPY comprises of 500 of the best companies in the United States. It's self-balancing, so you don't have that worry. There is dividend on SPY. Not too much, but the dividend is still pretty good. As of right now, it's at 340 3.47%. So, you know, given that the average bank savings account gives you like zero point zero 0.02, this is bounds better. You buy that and SPY is something that you could just keep on buying it, every now and then, shares, couple shares. Because the average return on SPY over the last 10 year was like somewhere around 12%. So and if you buy, even if at its highs. You see, it's a very stable stock going back 20 something years. This is the crash in 2018, but look at this as an opportunity. If you continue to buy it on the way down and it goes up, then those shares that you buy on the way down makes up for the shares that you bought higher. So it just keeps going up. You can see, if you bought it all the way down at the lows of 2009 to now, right, going 68 all the way to almost 400 now. Never return to those lows before again. So just keep doing that. Your retirement. Yeah, Vanguard is a pretty good platform. Vanguard has a lot of. It's been around for a long time. You have that. You have that consistency with it. I think Vanguard, Fidelity, TD Ameritrade, they've been around for the longest time. I think even Merrill Lynch. Merrill Lynch has been around for a very long time. So those are like the OGs, the dinosaurs. They have good customer service too. You can call them about anything. Yeah, feel free to PM me. You know, all right. I was looking at some penny stocks too. So I know a lot of you guys like penny stocks. Let's see. This was a good one. I saw this one. And I like the pattern here. It just exploded out of nowhere. So if it comes back, or if you guys think it's gonna keep going up, I like this little pattern that it's formed on the daily, little stair step pattern going up. Explosion zone. I don't know what they do. Just look at they do IT. It's not loading up, so kind of sucks. But I like this pattern on them. Yep, yep. Kevin is it's good, man. Yeah, the S&P 500, stress free investing. You get that peace of mind. You don't. Yes, a crash may happen, but if you keep buying it, you're safe. As long as you always invest with money that you don't need. Don't invest with money that that your emergency fund. Invest with money that you can safely put away and not care about too much. Uh, I saw another one. I was trying to remember. I'm trying to remember another penny stock that I like the look of. I've thought about playing Elvis. Yeah, because I like the look of this one too. Oh, they're betting, so they online gambling, maybe? Yep, online gambling. Oh man, you can gamble on gambling stocks too. Yeah, this is new. I like the pattern. They have an explosion. Just go alert. Somebody just go alert Wall Street bets. Just tell them that about this one. I have a penny stock watch list. You see POWW. That's where I found it. And this one looks promising. FTFT, FinTech Futures. I know. I think I heard people talking about this one. You always want to play something that you hear people talking about a lot about it, even if you don't want to invest in it long term. Oh, here's one. Another gaming. I like the pattern that it formed. This right here. Let's see. It's not loading up, but I like the pattern. This one. I think I might play this one. It's approaching its highs again. I hope it gets rejected. It gets rejected so I can get in. I add this to my so it's just my personal list. Let's look at it. These sometimes you need to play a little. It's okay to have a little bit of a more risky play because sometimes you take that risk, it could pay out. But don't make as long as you don't make all your plays risky. This guy. Oh crap. That's a pretty good monthly chart. But it looks like it broke out of this pattern here. So let's keep an eye on this one too. Wit. All right. Hopefully, you guys took something out of it. We're approaching that hour, so I'm gonna end the broadcast here tonight. Thank you everybody for joining me, and I'm gonna continue doing these little lives every Tuesday and Thursday at like 8 p.m. Eastern. So feel free to come join me, ask questions. If you have a stock that you want me to look at, feel free. Just come by, drop it in the comments, and we'll take a look at it. So thank you everybody for joining me. I'm gonna end the broadcast here. Have a good one.